I would say that I'm well content about the gold price. Obviously, breaking through this resistance on silver was important. I thought it had another great day today. It was dragged down earlier this morning with some significant gold selling. Popped right back up. I think shorts, if they are what many people think that are out there, they got a huge problem. They won't be able to wait too much longer. And it may take a psychological number being broken, which would be 40. It's just a round number, but it would be psychological. And we could see that ultimate squeeze that a lot of people have felt all along. But constructively, gold and silver still look like they want to go a lot higher. And there doesn't seem to be any real concerns of major downside.
Silver has reached its highest levels in over a decade, climbing to approximately $37.70 per ounce and achieving a remarkable 14.5-year high not seen since September 2011. This strong performance reflects a stair-step pattern, marked by sharp gains followed by sideways consolidation, signaling a sustainable uptrend. Peter Grandich, founder of Peter Grandich Company, sees silver's breakout as a key moment, noting its resilience despite gold weakness. He warns that a break above $40 could spark a major short squeeze, driving prices sharply higher. This scenario underscores the volatile nature of precious metals markets and the potential for rapid price acceleration when technical levels are breached. Understanding these silver market squeeze insights can help investors navigate this increasingly dynamic environment. Peter Grandich maintains a constructive outlook on both gold and silver, expressing confidence that neither metal faces major downside risks beyond possible 5 to 10% pullbacks. His long-term perspective anticipates significantly higher prices over time, supported by various macroeconomic factors and market dynamics that continue to favor precious metals as alternative investments. This optimistic view aligns with broader industry sentiment, as experts at the Gold Bullion Company expect gold prices to remain elevated throughout 2025. Meanwhile, the precious metal silver has emerged as a standout performer in 2025, posting gains of more than 20% year-to-date and demonstrating the strongest momentum the market has witnessed in over a decade. Before we dive in, don't forget to like, share, and subscribe. Hit the subscribe button and turn on the notification bell so you never miss our latest updates and insights.
But when it broke under 30 earlier this year, and then I look at the tremendous, clearly minimum short position, whether it's manipulated short or just people who don't believe it's going higher than that, and the industrial use, and then the ratio got so out of whack with gold that I became a silver bug. And I said, quite frankly, it could lead gold for a while. So I still see them as, close in terms of favorability. There's no dramatic difference as I used to see, always putting gold ahead of silver. I think silver will not be able to rally a lot without gold going up, and that could cause it to drag up. I do think gold has traded just admirably. Now, remember when it got near 3,500, I said I actually took profits in it because I thought it ran far, and it got something that almost always is a surefire signal. The percentage above its 200-day moving average was at a record high, and I felt that suggested that it's going to either take time for the average to catch up, or gold was going to have to go down a lot, maybe as far as 3,000, because the 200-day moving average at time was 2,700 and change. It's now over 3,000, that 200-day moving average. And in a couple more weeks, it'll move up even faster because some of the higher prices of gold will impact that average now. So I'm okay if we go through, and I know traders don't want to hear this, but if we went through Labor Day and we were still talking about gold on either side of 3,300, I'm fine, because if you're a 4,000 or 5,000 or even higher believer, the longer we consolidate here and that averages and overboughtness get worked out and things of that nature, the better foundation it will be to get to those numbers. So I would say that I'm well content about the gold price. Obviously, breaking through this resistance on silver was important. I thought it had another great day today. It was dragged down earlier this morning with some significant gold selling, popped right back up. I think shorts, if they are what many people think that are out there, they got a huge problem. They won't be able to wait too much longer, and it may take a psychological number being broken, which would be 40. It's just a round number, but it would be psychological. And we could see that ultimate squeeze that a lot of people have felt all along. But constructively, gold and silver still look like they want to go a lot higher, and there doesn't seem to be any real concerns of major downside other than, 5 to 10%, pullbacks. Well, I don't always know if institutions are called smart money, because several Nobel laureates did studies over the last couple of decades and found that 80% of active money managers underperform the simple performance of the S&P 500. So we may give too much credit to the average institutional person, but you are right that institutionals are significant major net sellers of general equities and now corporate insiders as well. And it's the general public that is reaching levels not seen in years, if not ever, on how much its own ownership of stocks. And of course, the lower echelon of stocks, lower price, are moving and, doubling and tripling in a matter of weeks. And historically, that has always happened at the end of a bull run and all. So it is concerning. And it's interesting that normally you would have expected, with the stock market remaining strong, that gold would not be able to hold the huge gains that it made. I think that's another credit you just got to give the gold, that in all of this, it's hanging here. And I think it's hanging here because it realizes chances are that's not going to last in the stocks. And eventually a serious correction, if not a bear market, will entail. And as long as it's not a collapse, because remember, in a collapse, people think of liquidity. They're not talking the stories about gold and bricks or anything. I need to sell something in order to get my house in order. And, gold could be sold then. But other than that, the stock market peaking and rolling over will be just another bullish factor for gold.
In a recent conversation with Andy Schechtman, Peter Grandich offered insights into China's strategic positioning in the global economic landscape, noting that China is strategically waiting out the Trump administration while quietly advancing its long-term objectives. Grandich warns this strategy could backfire on the West, as BRICS central banks keep rapidly accumulating gold as both a store of value and a hedge against Western financial dominance. The scale of this gold accumulation is striking and represents a significant shift in global monetary dynamics. In the first quarter of 2025 alone, global central bank gold purchases reached 244 tons, well above the 5-year quarterly average. However, China's central bank has been systematically purchasing physical gold to bolster its reserves for at least the past 3 years, with growing speculation that the country may be acquiring even more of the precious metal through covert channels. This strategic accumulation is part of a broader initiative to reduce China's reliance on the US dollar and create alternative mechanisms for international trade and reserve management. The implications of this systematic gold accumulation extend far beyond mere portfolio diversification. As BRICS nations collectively build their gold reserves while simultaneously developing alternative payment systems and trade mechanisms, they are laying the groundwork for a potential challenge to the existing dollar-dominated international financial order. Let's get back to the video.
I think one of the happiest people in the world right now, who's ever the director of new membership for the BRICS, because everything that's playing out in their arguments why you should join the BRICS since Trump has taken presidency points more and more. Yeah, they weren't household names that joined, but we saw several more countries join. We also, I talked with Andy Schechtman of Miles Franklin today. He brought up so many excellent points on what's developing behind the scenes, and China can wait out Trump, and meanwhile, it's maneuvering and doing certain things. And I think it's going to come back to bite them. And again, remember, the formation of the BRICS, believing why these central banks were acquiring so much gold, and by the way, they're continuing nonstop, was the reason why I got out of stocks and bonds and bought gold for capital appreciation. And that worked out fine. I just think, I tell the story. It wasn't too long ago, a couple months ago, when I was asked to speak to a brokerage group that my friend owns. And I think every financial advisor in that room was under 40 years old. And I'm sitting at the table, and they don't know yet that I'm the speaker. And my friend is about to introduce the speaker, and he says, our next speaker is also going to talk about the BRICS. And one of the financial advisors next to me leaned over to the other guy. Is he going to talk about the housing industry? I mean, I don't think everybody's that way, but I don't think there's a lot of knowledge in the financial service industry understanding what the BRICS are and what impacts it's going to have, not just geopolitically, but economically. And therefore, again, I'm a big believer in, I think they've had another great year. They're smart enough not to get into a war of words. You cannot beat Trump in a war of words. The guy doesn't care what you say, who says it. He's going to say, he's going to be as he can get very nasty, quite frankly, at times. And if you turn on him or don't longer support him, I mean, that's it. And of course, he said he's going to break the kneecaps and all this other stuff, but they're moving forward. And I think again, that's another one of the many bullish reasons for the gold market to work its way higher. The dollar was extremely oversold. It's going through a counter trend rally, which I talked about a week or two ago to my followers that expect that. But it had its worst 6 months ever in the first half of this year. And even in the face of this counter trend rally, gold more than holds its own. So I just think that he has 30 to 60 days more. But if we get into September and he still can't point to one of the top 3 or 5 countries in the world of a substantial inked trade deal, one of the things that I heard I thought was very interesting from an advisor to the Middle East, Saudis and all, he was just over there and they were the best of friends, said, who knows, Ian, if you make a deal with Trump, is it going to be a deal tomorrow? And so I think, like I said, he's losing his punch and his effectiveness. And I know there's a hardcore, I live with one, but the bottom line is I think more and more people are going to concern. And these outside incidents, the Epstein, the Powell. So for a lot of years, especially when I was a fund manager, platinum always traded at a premium of gold. That's why it was a platinum card was better than a gold card. Amex, now, of course, from that respect, that changed. I don't look at platinum like I once did 20 or so years ago, so I wouldn't be a good expert on it, other than I think what people realized is it got so cheap compared to gold and palladium. When silver shot up that day on its record day up, palladium actually went up more percentage that day than even silver. So I think they're making up for a loss, but I don't follow it well enough. It was always a metal that really was only come out of 2 or 3 places. Most of those places people were concerned about, especially now from South Africa and of course Russia. There may be some concern about supply demand. I don't know. The big driver that used to be was the Cadillac converters in cars. I'm not a good person, Elijah, to say other than I think that it's just part of the whole metals complex moving higher.
During the 2010 to 2011 rally, silver surged approximately 400% from its base. According to Bloomberg data, a similar percentage move from recent lows would push prices well beyond $100. Silver's current breakout and resilience indicate growing momentum in the precious metals market, with a potential move above $40 likely to trigger a powerful short squeeze. Gold, on the other hand, is steadily consolidating, laying the groundwork for a sustained long-term advance. Together, silver and gold reflect deeper shifts in global finance and geopolitical strategy, reinforcing their importance as core assets in an increasingly uncertain world. Could silver's breakout be the spark that reignites a long-term bull market in precious metals? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe. Only 4.5% have subscribed, so hit the bell icon and turn on notifications to stay updated. Your support helps us continue delivering the latest market insights to you and the entire community. Thank you for watching.